Today, we will explore the recent changes in France's tax policy and how they are impacting the country's economy. With adjustments to the national budget, new dynamics are emerging that affect both businesses and ordinary citizens. Stay with us until the end and discover all the details of these changes. Don't forget to subscribe to the channel, leave your like, and comment on what you thought of this video. Your participation is very important to us. In recent months, France has implemented a series of significant reforms in its tax policy, aiming to balance the national budget and stimulate economic growth. Among the most notable changes are the increase in taxes on large fortunes and the revision of corporate tax rates. These measures are designed to reduce social inequality and encourage business investments, creating a more favourable environment for entrepreneurship. Additionally, new tax exemptions have been introduced for strategic sectors such as technology and renewable energy, seeking to position France as a leader in sustainable innovation. The reform also includes adjustments to social contributions, directly impacting both businesses and workers. These changes reflect an attempt by the French government to adapt to current economic dynamics, promoting a more equitable distribution of the tax burden. However, these changes are not without controversy, sparking intense debates among economists, politicians, and the general population about their real benefits and potential long-term consequences. The discussion on the effectiveness of these reforms continues, especially regarding how they will shape France's economic future and its competitiveness on the global stage. The reforms in French tax policy have brought about significant changes in the business environment. With the revision of corporate tax rates, many companies are reassessing their investment and expansion strategies. The increase in taxes on large fortunes also directly affects high-level entrepreneurs, encouraging greater transparency and financial responsibility. Additionally, the new tax exemptions for sectors such as technology and renewable energy are attracting startups and investors to innovative areas, fostering a more dynamic and competitive ecosystem. Companies of various sizes are reacting differently to these changes. Large corporations may find it easier to absorb the tax increases, while small and medium-sized enterprises face greater challenges, needing to make swift adaptations to maintain their financial sustainability. The introduction of specific tax incentives aims, on one hand, to support strategic sectors, but on the other hand, it can create disparities between different segments of the economy. This scenario creates an environment of uncertainty where flexibility and adaptability become essential for business survival and growth. Furthermore, the tax reform is stimulating greater innovation in business management and operations practices. With the new tax exemptions, many companies are investing in advanced technologies and sustainable practices, aligning themselves with the long-term goals of the French government. This trend not only strengthens the competitiveness of companies in the global market, but also contributes to the country's sustainable economic development. However, adapting to these changes requires careful strategic planning and a deep understanding of the new regulations, which can be a challenge for many organizations. The changes in French tax policy have significant repercussions on the daily lives of citizens. With the increase in taxes on large fortunes, there is an attempt to reduce social inequality by directing resources to essential areas such as healthcare and education. This redistribution of income can lead to improvements in public services, broadly benefiting the population. However, there are concerns that tax increases might impact household consumption and savings, influencing purchasing power and overall financial well-being. Furthermore, the changes in social contributions are directly affecting both workers and employers. For employees, there is a possible reduction in net salaries, which could discourage consumption and affect aggregate demand in the economy. For employers, the new rates may increase operational costs, leading to potential job cuts or the adoption of more efficient practices to mitigate financial impacts. This dynamic creates an environment where both workers and companies need to adapt to the new economic realities, seeking a balance between financial sustainability and quality of life. On the other hand, tax exemptions for strategic sectors such as technology and renewable energy are promoting a transformation in the country's economic structure. These incentives encourage innovation and the adoption of sustainable practices, aligning with France's long-term environmental and development goals. The transition to a greener economy not only contributes to mitigating climate change, but also opens up new employment and growth opportunities in emerging industries. However, the effectiveness of these measures depends on the ability of companies to take advantage of the incentives and the continuity of government support to ensure consistent and sustainable progress. French tax policy is undergoing profound changes aimed not only at balancing the national budget, but also at promoting more inclusive and sustainable economic growth. The implemented reforms directly impact the business sector and society as a whole, creating new challenges and opportunities. With the redistribution of resources and incentives for strategic sectors, France seeks to position itself more competitively on the global stage while facing the complexities of an ever-evolving economy. Thank you for watching our video. If you enjoyed the content, don't forget to subscribe to the channel, leave your like, and share your opinions in the comments. Your participation is essential for us to continue providing relevant and up-to-date information. Until next time.